Ask any serious investor and they will tell you that there are opportunities in any market at any time. Some of the questions that you want to ask yourself at this point include, where do you want to buy? Right? Think about what city, what state, what market do you want to buy your first rental property in and ultimately own real estate in? Do you want to own real estate right in your backyard? We generally do suggest starting in your backyard if it makes sense and you can afford to do it. Also, you have to consider, is where you live a growth market? Are the jobs moving in? Are there people moving in? Is it a desirable place to live? If you're in a very rural area without a lot of people moving in there, development, rehabs, and investment, then you may want to find the next closest neighboring city that has at least 20 to 50,000 people living there. If it's not in your backyard, then you might want to consider long distance or out-of-state investing. I bought my first several rental properties out of state, mainly because I couldn't afford the down payment of a property in my local market in Southern California, and I wasn't able to find deals that immediately cash flowed. Normally, you'll find higher cash flow properties in the middle of America and in the Midwest, and you'll find higher appreciation properties in coastal cities. You also want to consider, what type of property do you want to buy? Is it a single family, a multifamily, or some type of commercial property? Also consider, what price point can you afford to buy? So when you get pre-qualified with the lender, you can actually help answer this question. Also, understanding your target market will ultimately help you decide what price point makes sense for an investment. Just because you can afford $1 million of property doesn't mean you should buy $1 million property. Maybe you buy 4 $250,000 homes because that price point provides the highest ROI for your market. You really won't know what price point makes sense for your market until you get in there and start analyzing deals. As you define your investment criteria, you also need to define, what strategy are you going to implement? There's a lot of shiny objects out there in real estate, so you want to really define what makes sense for you. There's long-term rentals where you're renting to a tenant for 12 months, maybe several years. There's short-term rentals where you're doing nightly rentals or maybe a few nights at a time. This can provide you higher revenues, but it's really like running a business, so it's not as much of a passive investment. Then there's medium-term rentals where you're renting to someone for 30, 60, or maybe even 90 days. Maybe you're looking to do a house hack, which is when you live in the property for a period of time while renting out a portion of the property to other people to help support the mortgage, create income, and then eventually you can move out and do it again. This is an amazing strategy, especially if you're already paying rent. It probably makes sense to buy a rental property that you can live in and then start to rent out, because why would you put your rent and pay someone else when you can apply that to your own property and start building equity? You might also consider buying a distressed property, right? A distressed asset where you have to rehab the property and increase the value and eventually refinance or sell it. This is what we call the BRRRR method, which stands for buy, rehab, rent, refinance, and repeat. So in addition to your criteria, you have to think about your terms as well. So terms are how you buy it. And these include everything such as the price, the down payment, financing, closing costs, essentially everything that's negotiable on a piece of real estate. So you're going to be seeing a lot of deals. When you implement what we teach here at Real Estate Skills, the opportunities are going to be abundant. There are deals everywhere, but not necessarily the deals that are a good fit for your personal investment portfolio. There are various types of income producing real estate, and those fall generally into the categories of residential and commercial real estate. Within residential real estate, there's single family homes, duplexes, triplexes, and quadplexes. Once you get into a 5-unit property and up, that's generally what we consider commercial real estate. That said, commercial real estate is a very broad term, and that also includes properties that are used for a variety of business purposes, such as hotels, office buildings, retail centers, shopping malls, self-storage, industrial buildings, even data centers, and other types of real estate. When I bought my first rental property, I bought a single family home for a few reasons. The first of which, it's a more relatable asset. I've lived in single family homes, and you probably have too. It was just a less intimidating type of investment. Second, there's just less units to manage all at once, and it wasn't as overwhelming as buying a bigger apartment building. Also, the market I ultimately invested in was primarily single family homes, so there really wasn't a lot of duplexes or multifamily properties to choose from. Also, one of the biggest reasons is that the financing available for single-family homes is some of the most favorable in all of lending. You can get some of the best leverage and interest rates when you're buying single-family investment property. Also, at the end of the day, there's more potential buyers for a single-family residence. This includes owner-occupants who are actually going to buy the property and live in it, as well as other investors who have the same idea of buying and renting out properties. So when I was eventually going to exit the property, I had more options than only selling it to investors. Ultimately, you need to ask yourself, what are your real estate investing goals? What are you looking to get out of investing in a rental property? Are you looking to quickly replace your income from your W-2 job by buying enough cash flowing rental properties? Or are you looking to park some cash in a property that maybe doesn't have cash flow but can appreciate faster and grow your net worth? Are you looking for a house hack that you can eventually turn into a rental for a year or two? Knowing your goals will ultimately help you decide which properties to pursue. So ask yourself, how do your goals shape your acquisition strategy? When I started buying real estate, my goal was to create $2,000 per month in net cash flow from my rentals, which at the time meant I could cover my living expenses. This was mainly rent, food, and some minor overhead costs. So at that time, it meant I had to buy 5 rental properties that cash flowed $400 per month. So if the average down payment was about $25,000 to buy one of those rentals, I knew I needed about $125,000 in cash to afford enough rentals to hit my goal and become financially independent. This is a great way to calculate how much money you'll need to save to invest to reach your financial freedom number. Now, I must say that my living expenses were much lower back then, and now my goals are much bigger at this point. And now I own properties that have cash flow of sometimes even $5,000 per month per property. So your goals can change as you grow and develop in this industry. I will say that most of my net worth in real estate has come from appreciation, and cash flow is truly there to keep the properties long term. So if you don't need to replace your income and you have a solid job or have other ways of making money, then you might consider buying in a market that is poised for appreciation and growth. Long-term, this could pay off much larger than immediate cash flow. However, you should never buy a property that is losing money every single month. So ideally, you'll buy a property in an appreciation market that can, at the very least, produce some positive cash flow. Regardless, you should craft your personal investment criteria based on your goals. At the end of the day, you need to figure out what is a good deal to you. And while I can sit here and tell you what I think a good deal is, only you can answer that question for yourself.